Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Thursday market webcast. Okay, we're going to make this quick. It's about 9 o'clock Eastern time. So, the bears continue to defend the daily midband, the 20-day. They continue that lower Bollinger Band ride, which is stretched into today, and will continue into tomorrow. They made a pretty impressive lower low, and I would say the last 5 minutes of yesterday did a solid 50 handle puke out. I took a plus 50 on a runner right before that. I felt pretty good about myself. I'm like, you know what? I gotta run a kid to an appointment. I said, everybody have a good one. Blah blah blah. I went and grabbed my keys, forgot my phone on my desk, came back in, took a look. Another 50 to the down. I'm like, okay. So the 50 could have been 100, or we could have re-entered. Then you get into the coulda, woulda, shoulda bullshit, which, that's when I just turn my screen off. We get in the car and go. And, there's nothing you can do. You cannot beat yourself up for not being in every inch of this tape. There's more than enough tape to get your days, weeks, everything done that you need to get done. I was saying to the subscribers this morning, we walk into this morning, we sit down at our desk, and it's been a 200 handle week, and we're heading into Thursday. So, 10%, of those handles, hits our 20 handle a week goal. So you got to have a little bit of perspective. This kind of tape is also going to tire you out. If you find yourself, exhausted looking at this thing, it's like, look, take a step back, decompress, take a walk, do whatever, come back when you're fresh. Don't overtrade it when you're tired or you're getting burned. That's when you make mistakes. So the next couple days for us are about not doing anything really stupid. And then we move on to next week. All right. So as far as the tape goes, they have, the Bears have to maintain their advantage. Stay below that lower Bollinger Band. If they can break yesterday's low, then it opens up the yellow line here. That's the 100-day exponential moving average. On the hourly chart, you can get a good picture. They failed at the 9. That's your 9-day. They confirmed it. At the weekly pivot, and then it came back through really, really nicely, really swiftly. And this was a hell of a move down right here in this 3 o'clock hour. That was nasty. So they built it back up a little bit overnight. The 50 here, trying to hold and trying to be resistance. You have volume weighted average price and our proprietary moving average locked up right around 29.5. It failed there at just before 8:15 at around 32. We're flat right now. We're flat into the open. I tried to mess with it a little bit on the short side. It didn't work. So I'm flat. I'm going to wait for this thing to open. I hate trading between 9 and 9:30 in the morning. It's not my thing. It's going to make the move I was looking for now. Anyway, so, it's like I said, you're not going to catch them all in this tape. What you need to do, though, is you need to be smart. You need to respect risk. Don't overtrade. And then on the ones that are really moving, stretch out your profit targets. By the time yesterday really got rolling, we had, instead of taking 4 to 6 on our first thirds, we were taking 10. And then we were looking to take 20 to 30 on middles. But we had that 10 locked in. And then we were rolling stops down as we go. What you don't want to do is get greedy and say, okay, well, we're going down. We are going down. I've been wrong every day of my life, but not today. Today's the day we go down. Look how smart I am. So I'm not going to take any profits or do whatever. And then all of a sudden, it'll round trip, 30, 40, 50 handles on your ass, and you're left with nothing. Don't do that, because that will screw with your head. That will seriously screw with your head. Take your profits. It's okay to stretch out your targets. Lock stuff in and do what you need to do. All right, so 29.5 is going to be important. I think we'll get a little bit of a bounce this morning, but the key to every one of these bounces, and that's not any great, prescient thing on my part. The bid is going to continue to fight back. We're only down 5% off the highs. This is really not that big of a deal, everybody. The question is, when we make these bounces, do the bears continue to defend them and turn them into lower lows? If they do that, I don't know why that thing is sketching the way it is. If they do that, then you can start to see, this usually works, then you can start to see bigger moves to the downside involving bigger areas. We talked about the 200 yesterday. We talked about the 100 yesterday. We talked about the 50. Well, we're below the 50. The 100's coming up. You can see it down there on the chart, right around 44.80. That's pretty achievable. But, as long as the bears fight off the bounces And look, bear market rallies and bear market bounces, and I'm not saying this is a bear market. I understand there's a very specific definition of that. Down market bounces, okay? Weak market bounces, whatever, okay? This is not fucking CNBC. Weak market bounces tend to rip and go farther and harder than you expect them to go. You can be long, you can stand aside, don't fight it short. Wait for the damn thing to pause, wait for it to die. You'll know when it does, and then step in. Don't get torn up trying to fight price on weak market bounces. That's a big no-no, and that's going to be a thing for the next couple days. All right, everybody have a good one. Be safe, be healthy, take care, trade them well. I'll talk to everybody tomorrow.